We've got a little bit more on Tesla's results. Let's bring in fast money friend Gene Munster of Deepwater Asset Management. Gene, it's great to have you here. What are your thoughts here? We know the conference call hasn't kicked off and we only just have the releases, so still a lot of questions percolating. But what's top of your mind here?
Well, I think what it's come down to is there's a question, is Tesla smoke and mirrors or is it substance? And I think the results this quarter are going to give evidence for the smoke and mirrors camp to think that this is just another car company. And I think that there is really little to be gained. I think one thing to be gained is that margins are declining, but they're not plummeting. They actually did a little bit better than expectations, still on the decline, but a little better than expectations. So they're going to survive. They got $26 billion in cash, but this ultimately comes down to is, do you believe? If you believe that the future is going to be hybrid cars and it's going to take a long time, 20 years to get to full electrification, stock's not going anywhere. If you believe that electrification, despite all of its troubles now, are going to accelerate for multiple reasons, and you believe in the concept of autonomy and Robo Taxi and that they're actually going to get this out, Tesla's probably the best position. They are the best positioned company to deliver on that future around autonomy and electrification. It's a big market, $2.5 trillion market. The smartphone market, $600 billion. And so I think that's what this ultimately comes down to. As the panel has said, stock, it's going to move based on what happens on the earnings call at this point, some commentary. I still think the street numbers are coming down for 2024 on delivery, so I think that could pressure the stock tomorrow. But ultimately, this company is going to survive to see this next generation vehicle and to see FSD and see the rising tide of electrification. So I'm still a shareholder. I'm still optimistic. And I think that I just believe in what they're doing from an innovation standpoint.
Do you think the stock movement is justified based on what we got from the release, just on the next gen vehicles and perhaps better than expected margins when everything else was pretty crummy?
No, it's understandable. I mean, you can reason why it's up because people are so desperate for any good news. And given the Reuters reporting more recently that they're canceling this initiative on the 2025 initiative, the fact that they're moving it up, that is a directional positive. But again, I think that 2024 is a throwaway, and stock could keep going down. It could be flat. If you again believe in a future of electrification, Tesla is the best positioned company. But as far as this results, my guess is that stock probably fades in the next 2 weeks, finds its ground, and then as we get closer to 25, starts to rebound.
Hey, Gene, it's Tim. So can we reframe the kind of the investment rationale in terms of either whether we're talking about a fair value, whether we're talking about growth versus something? And I can appreciate the dynamics here, which they are so far ahead. It's a technology company, but it does get back to that juxtaposition to they're not GM, but at the same time, they are an auto company. Can you talk about that multiple in Tesla and why you can stand behind that?
So I believe that this should trade at a similar multiple ultimately to Apple. I think that what they're doing around hardware and software, autonomy as a service, I think justifies that type of a multiple. And when you, right now, the multiples, stock's going down because earnings are going down. But on a revenue multiple, I think that that is justified. And so why is that justified? Is because we get back into a growth phase. Investors tend to look more at revenue growth than they do at earnings growth. And so if you, just to kind of put it all together, if you build a case that they can grow revenue at 20, 30, 40% as they come out of this trough and do a 7 multiple on that, the numbers you can get to a stock that's double where it is today. And so that's where I get it, is a belief that the growth is going to reaccelerate. And why do I believe growth is going to reaccelerate? Because I think it's an undeniable truth around electrification. I think traditional auto is making some grave mistakes in terms of slowing, which is an advantage for Tesla longer term.
Gene, it's Karen. Thanks for being on today. What do you think the math is around Robo Taxis? How do you think about it? What is the model there?
So it's pretty powerful. If, again, you have to believe. It's like a religion. If you believe that this is going to get out, I happen to be in the camp that I think that they will eventually get this out. I think, by the way, Lyft and Uber, they're in big trouble if, in fact, Tesla does get this, because anyway, I think that that's a whole different topic. But as far as the impact, we have, they're going to do, call it 2 million vehicles, more or less. If you get to, just for easy math, 1 million robo taxis, a lot of those are going to be Tesla owned. They're actually going to own their own taxis. Some of them will go to third parties. But if you get to that million and assume about 3 rides per day, you effectively can double the operating income. Now, I was just talking about the importance of revenue, but I think that is the math. So that's about $10 billion per year. They did last year about $9.5 billion in operating income. That's with 1 million Robo Taxis. So that's a lot of them, but that's where you start to get it. The beautiful thing about it is there's a waterfall factor. As you continue to add those cars, the impact to the Robo Taxi fleet continues to compound.